Let's get across the market open now. David Lane joining us from Autominet. David, good to see you in studio. Welcome.
Thanks, Andrew. Great to be here.
All right, let's take a look at what happened overnight. More record moves there on global markets, particularly Wall Street, driven by those tech stocks.
That's right. Yes, we're in well and truly in reporting season in the US, and actually reports generally have been quite good. We've got some massive companies that are reporting at the moment, but yeah, those tech stocks and AI. Microsoft has done a deal with OpenAI, with OpenAI becoming more of a profit-making business. Originally, it was a not-for-profit, and they're making moves, which means that Microsoft will have about 27% of OpenAI. So they reached the magic $4 trillion mark, and then Apple, not far behind it, was also over the $4 trillion mark overnight. So yeah, certainly big tech continue to be very, very strong in the US.
And meanwhile, Nvidia eclipsing the $5 trillion mark.
Correct.
Those valuations are just eye-watering, aren't they? So should we be concerned?
Yes, and we are concerned and we are cautious about the valuations. But then, having said that, as I said, that reporting season's actually been really quite positive. So it is a bit of an earnings-driven market at the moment, and momentum is definitely behind it. But yes, those PE ratios are getting very, very fully priced.
And of course, investors buoyed by potential for some sort of trade deal between the US and China. We've got the Fed tonight making its decision with, it's 100% priced in by the markets that they're going to be cutting.
Yeah, that's right. Yeah, and that's the interesting conundrum is that at the one point you've got stocks rallying because of earnings expectations, but then the market's also apparently positive about the economy slowing down and the need for a rate cut.
Well, we often forget that, don't we? Because the reason they're cutting, obviously, is because that weakness in the economy.
Yeah, and particularly in the labour market. They've got the unemployment rate is holding okay, but that's only because there haven't been anywhere near as many migrants going in because of all of the border shutdowns. So yeah, definitely that labour market is softening, and I think that's probably what the Fed is most concerned about, and potentially could lead to some further slowdown in the US if it doesn't improve.
Now, David, on the local calendar, more quarterly results today as well as a raft of AGMs.
That's right, yes. We're well into AGM season, quarterly results. Medibank is also having a big investor day today, and they've already pre-announced about $200 million of potential growth that they're looking at, and sort of changing more into not just an insurance business, but looking also at the wellness side. So yeah, certainly a lot of reports coming through, and as we've seen in the last few days, companies during their AGMs will make announcements or even give updates to their guidance, and that's when we can have significant swings in some of the individual share prices.
Well, and to a case in point, yesterday with some interesting news too, certainly as far as CSL is concerned.
Yep.
Look, I don't think a lot of people picked this. That was marked down severely yesterday off the back of its update on its AGM.
Yes, you're right. It was sold off very severely. Strangely, when CSL first announced that they were going to spin off the Seqirus business, the market didn't like that. Yesterday they said that they're actually not going to spin it off yet. And the market didn't like that either. Yeah. But interlinked within that was also the fact that they really had a bit of a downgrade, and said that the US flu vaccine take-up hasn't been anywhere near as strong. They're concerned about the outlook for that flu business. So the analysts look like they've downgraded expectations. Our analyst has done a downgrade of about 2% in the near term to earnings per share. Longer term, about 6% of earnings. So not a significant downgrade there, but yeah, the market certainly didn't like that announcement, and it makes us question whether or not CSL is really good value or not. We've still got a hold recommendation on it, and I think that the issue that CSL's now got is that it used to be priced as a growth stock. It's now only earning or growing their earnings by around 10%, maybe even low or in single digits. So it's not necessarily growing as well as it was. So I think the market is really re-rating where CSL should be trading.
Now, another stock making news, perhaps for the wrong reasons, WiseTech on news that ASIC and federal police officers raided the Sydney office
Yes.
over share trading.
Yes, yeah, that's right. WiseTech, we were actually looking at it yesterday and thinking that around $80 it actually looked quite good value, because from a business point of view, it's actually doing quite well. New CEO actually seems to be doing a good job. They're introducing new products, so the outlook for the business was actually quite positive. But as you said, that announcement that came out pre-market yesterday sent the shares down quite a bit, and unfortunately WiseTech still has that corporate governance cloud over it, so I think it'll be some time before that cloud clears.
And also Domino's, news yesterday of potential bid by Bain Capital. Look, both parties denying it. Is it right for the picking?
I think it certainly is. It's a business that has a lot of value. Jack Cowan has now become the interim CEO. He obviously sees value in the business as well. They have that ability to turn it around. As you said, we saw significant swings yesterday. I think earlier it was up about 15%, and then when Domino's denied the rumours, it was sold off a bit and finished up about 7 or 8% in the end of the day. It is a stock that does show value, but they are loss-making at the moment, and really needs quite a bit of work to turn itself around, particularly in Japan and particularly in Europe.
Now, on the macro front, big event today in the September quarter inflation read. And in fact, we heard from Michelle Bullock the previous night, just perhaps she was sounding a little hawkish, wasn't she, about the potential that inflation could re-accelerate, and therefore perhaps next week on Melbourne Cup Day, when they make their interest rate decision, maybe they won't move.
That's right, yes. We're certainly seeing fairly sticky inflation here in Australia. As you said, the CPI number today will be very, very important, because I think that we saw some of the monthly numbers were quite strong in terms of inflation. So the RBA will be keeping a very close eye on that, and definitely wouldn't be betting on a rate cut at the moment. It's I think probably more likely to stay steady at this stage in Australia.